Welcome to Revere Asset Management's Your Money with Danny Stewart
The market will always overshoot to the downside and to the upside.
and Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep. All right, hello. You got the B team hosting again. Danny not available, so I am going to take us through no mailbag, no economics. We are going to go straight into charts. And let's not delay. Let's get right into that. So let's take a step back a little bit, because this has really been some really crazy market action over the past 2 months or so, particularly with the what am I doing here? Okay, let's draw some lines. We're going to start right here with the big negative reversal in the market, and it coincided with, it was on November 20th, and it coincided with NVIDIA reporting earnings, initially showing strength. Let's bring up NVIDIA, and that's this day right here, November 20th. Let's bring up a 60-minute chart. You can see the gap up on earnings right here, getting everybody lathered up. The AI, anything related to AI was gapping up that morning, and that lasted less than an hour. And you can see the immediate move down from NVIDIA. It's frankly, it's just underperformed since then, although recently it is forming a series of higher lows. So let's go back to a daily chart on NVIDIA. As you know, led the market for basically years, frankly, since it first surprised everybody with the massive demand for their chips that was AI related, started with OpenAI coming out, but NVIDIA not able to get any relative strength going over the prior 2 months. It topped in late October, about the same time that the market topped. So here is the earnings report, and it's been stubbornly unable to get above this declining green line. That's our 21-day exponential moving average. We use that for our short-term trend. Now, normally, NVIDIA obviously is prone to making some fantastic moves. From April to August of this year, it ran from under $100 up to $184, an amazing double, more than a double. Consolidated a little bit, tried to break out, make a higher high. At the same time, when it was breaking out, the market was starting to pull back a little bit. You can see that with this black line up at the top. This is what the S&P 500 is doing. But a funny thing happened on the way to the graveyard for the market. The next day after this big reversal in the market, we're back to the S&P 500 now, breaking the 8, breaking the 21, breaking the 50-day moving average. Our next level down after things start to break like this, let me bring up a weekly chart. And I mentioned it several times. We talked about it on quite a few of our videos, the 100-day / 20-week moving average. Now, NVIDIA didn't recover, but the market did. And it did on that next Friday. And ironically, the catalyst at the time was completely unrelated to NVIDIA or AI. It was one of the top guys at the Fed coming out and saying that he was basically in favor of a rate cut coming up in December. Now, there had been very little data coming out due to the government shutdown. This guy stepped up to the plate, mentioned that, and the markets did a massive V rally from that point. They were up 5 straight days, including the Friday before Thanksgiving, all 4 days of Thanksgiving. And now let's go to a 30-minute chart here, and you can see what's been happening this week. So all we're doing is making a series of higher lows and higher highs. That is the definition of an uptrend. And at Revere, we have been riding this. We actually got stopped out of every one of our positions because we were dropping. When I say we, I mean the market and our portfolios. We turned from a strong uptrend and all-time highs in mid-October to a pullback, a bounce, and then a second leg down. And we got stopped out of our individual positions. The only thing we had left at the bottom here on that Thursday, by the end of the day, was our index position. Everything else, we've got stops in place for everything. We'd been taken out. Our drawdown was less than 6%, which was pretty impressive. We were very happy with it because we were seeing a lot of the high flyer leading names that were quantum related, AI related, were down 20, 30, 40%. Our stops protect us every day that the market is open. We are meticulous about risk management and meticulous about being in the best leading stocks when the wind is at our back. And we define the wind as at our back is when the market is trading above the 3 time frames that we track. That's the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average. So since that big shakeout after NVIDIA earnings was on a Wednesday, the shakeout was on a Thursday, the day one of the rebound was on a Friday. And we've just climbed higher since then. Before the open today, there was a little bit of volatility at 10 o'clock Eastern. Some inflation data came out as well as economic data. And let's go to an intraday chart on the S&P 500. There's a breakout right around 10 o'clock. We ran up to 68.96. But then Ted texted everybody in chat and said, this is really good action. And we, of course, chastised him for jinxing the rally. And wouldn't you know it, Ted is all powerful and jinxed the market, and the market reversed around 11 o'clock Eastern time. We've warned Ted not to do this, but he continues to do it. But we're going to keep him on board anyway because we like him and he has a lot of other qualities that offset his ability to top the market. Little tongue-in-cheek there, or is it? We shall see. But as of right now, the market's pulling back a little bit. It broke the morning low of 68.66. That is, every day we track the opening 30-minute range. We break above that 30-minute range. That means the bulls are in control very short term for that day, which they were, up to 11 o'clock Eastern. Then we pulled back into the range, and now we just pierced the bottom of that range as of around 11:50 EM Eastern time when we're recording this, but we're back inside that range. So possible a little shakeout below the opening range of 68.66 and back into that range again. So right now, if you're inside that range, it kind of means that you're neutral. And that's the indexes. Of course, we're monitoring every one of our individual names. Some are outperforming the market, some are in line with the market, some are trailing the market, and that's the case constantly when we're in the process of watering the flowers and pulling the weeds, is what we like to say. So during this uptrend, when we reversed across our portfolios, we took quite a few small positions, pyramided into some, stopped out on others, rotated some money around, but we all pretty much came into this morning as as fully invested as we can be, leaving a little bit of cash for possible hedges or new opportunities. Did some offensive selling early in the day in TURBOTECTION, got stopped out on a name, GH, in GROTECTION. Remember, a lot of these shotgun approaches that we take, the way my expectation is that these should ride the 8-day exponential moving average higher. We see it time after time in the strongest of markets, the strongest leading stocks ride the 8 EMA higher. I took this position right here, have held it for 7 days. It basically made no progress. You can see the relative strength line in here, and we pulled this weed this morning when it had a harsh intraday break below the ATR limitation that we're using against the 8-day exponential moving average, and I got stopped on GH for a 10 basis point loss against the overall portfolio. And believe it or not, I celebrate my losses in here because it means that I'm sticking with the system. I know the system has a long-term positive expectancy. I know that everything I buy is not going to work, and doesn't bother me in any way, shape, or form that a stock that I own reverses, hits my stop. Because for one thing, it's opening up a position in the portfolio for a stock that's acting better than it is. But if the market's going higher and you own a name that is lagging on a relative basis, question while you're in that name. We do it every day. We do it at our morning call at 9 a.m. We do it in our afternoon call at 2:30. We review everything that we own. And we're not going to mess around quite with our clients' money. If you earn your spot in the portfolio by showing positive action and giving us a low risk entry point, you keep your spot in the portfolio by maintaining that relative strength and positive action. And there's a long line of stocks on our lists waiting to take the place of something that's lagging. In this case, it's GH. And stopped out on it. Yes, it bounced off the lows. Yes, it never reached the 21-day moving average. But that wasn't my criteria for, I don't have a crystal ball, and my criteria was not to give it to the 21-day moving average, because in the best markets, I size a lot of these names against the 8-day exponential moving average, because in the strongest of markets, it should continue to ride it higher, very similar to the way it did back here at the beginning of August. I didn't get that. I'm moving on. So back to the S&P 500, a little bit of a squat after that breakout at the beginning of the day, but we're seeing some outperformance on different leading names. As I said, some of them are underperforming, but all in all, you can't complain about a series of higher highs and higher lows trending above the 8-day exponential moving average. It's the preferred market for us. We're above the ultra short term 8, we're above the short term 21, we're above the medium term 50, and we're well extended from the 200-day moving average. You can see the moving averages starting to fan out, the 8, the 21, and the 50. And as long as that continues, we'll stick with the indexes and the leading names that are outperforming the indexes, and we'll pull the weeds and water the flowers. And that is a summary of what we're doing here at Revere. Our two portfolios are named GROTECTION and TURBOTECTION. They're designed to follow the trend of the market. This was pretty harsh, but again, it got us out of the leaders, but it stuck with our index positions, and that index position bounced. So we're able to bounce along with that and then recoup some of the losses that 5-6% drawdown that I mentioned during this pullback. Bounced at a very logical spot, the 100-day / 20-week moving average. And right now we're in full bull mode, not to jinx it, but we're following the trend of the overall market and monitoring our leading stocks. And that is where the market is, and that is where Revere is as of 12 Eastern time on Friday, December 5th. And tonight we'll have a video. This weekend, Todd will have a weekend roundup. This podcast that we're recording right now will get released Friday afternoon. And then the nightly Friday videos that we do will update everything that we discuss. Our 2121 and Turbo 12 lists are refreshed every day in Monday's video. We keep those lists going throughout the week. That tells us a diversified list of leading names are working. We monitor the RG8, that's the Revere 8 ETF, Growth 8 ETF composite. We monitor the individual indexes. We look at the dollar. We look at bonds. We look at crypto. We look at the VIX. We look at the average true range of the S&P 500. All of these things. We look at the percent of stocks above their 5-day moving average. All these things are updated every night in our videos. We make the only video that you should need to watch in order to stay in sync with what's going on in the overall market. Now, normally, Dan would put his Don Interpreter on and add anything to that or clarify anything, but Dan's not here, so you can always ask questions on YouTube in the Q&A, and we answer those questions. And what we've got for you now is 3 presentations by our associate portfolio managers. We're going to start with Connor. He's going to talk about some leading stocks. Then we're going to go to Todd. He's going to take a look at some semiconductor names. And Ted is going to wrap it up with 2 leading names and a look at some precious metals. Connor, we'll start with you, and we'll start with a stock that we own. EQT, oil and gas name. These have been showing some relative strength going back to October. And take it away, Connor.
Yeah, so I got 3 different names to talk about today, and actually all of them are owned in GROTECTION, in TURBOTECTION, and some in GROTECTION as well. So starting out with EQT, if you go to the monthly chart, Don, and one thing that you'll notice is as trend followers and as like technical analysts, we're always looking at charts. And one of the best ways to find leading themes early is big multi-year bases. And the reason for this is because the big institutions that manage billions of dollars, they're the type of ones that accumulate in these bases. And you can see that through in price action and volume signatures. And if they're accumulating something in a base, they probably know more than us, and they have a thesis that it's going to be a trend. And EQT here, this has a 10-year base, and it's just now it's really trying to get back above highs that go all the way back to around 2011, 2012. And this is a natural gas name. It's the second largest natural gas producer in North America. And typically, we typically trade growth stocks, but in this market, there's a lot of different things moving, and this name does have an N, and that is simply the demand for power in data centers. And natural gas is projected to provide 60% of the new US power generation capacity requirements to meet the demand, and EQT is one of the leading names in this group. And as you can see, it's just really trying to get out of this base. And so what we're looking for here is this to break out of this base, and the measured move could be pretty nice. There's always a saying, the bigger the base, the higher in space. And when you get these breakouts out of big bases, it has the potential to go on a nice run. So hopefully this can get passed through the 62 level and trend to the upside. And for now, it's looking pretty good. And then the next name is Teradyne. And this is another one with a very big base. If you go on the weekly chart, this one, not too many people were talking about this one as it was dormant. And you can see now this one has a 5-year base, and the catalyst for the gap up was earnings related. And again, another big theme that people talk about, we're looking at, is robotics into next year. And what Teradyne does, they're involved in this space. They design and manufacture automated test equipment and robotic solutions. So to us, that's a clear N. And again, it had that earnings gap, kind of just got held down by the market. The market's pulling back hard. It's really tough for stocks to not pull back either, but that's why we look for stocks that pull back less. And this one was a pretty orderly pullback, and you can see the first sign of the market rallying. This just catapulted back to highs relatively quickly. And again, so this is moving off that recent earnings catalyst. You have a massive base, and people are looking in the future as they're involved in robotics, which could be a big theme in the future, and price action agrees. And then the third one is LMND. And again, this fits the theme of big stage 1 bases. This is a younger growth stock that recently had an earnings gap as well. And as you can see, this is still below all-time highs, but this is in a stage 2 uptrend and relatively early in the trend too, as it just kind of broke out of this stage 1 base. And this is, a smaller cap type name. And with the Fed cutting rates in December, these stocks tend to outperform. So that's kind of the thesis there. And, we always like to focus on earnings continuation patterns. And this is one, and this has a big base. So those are three names in the portfolio and kind of what we're thinking. And yeah, just the big weekly bases can really help in capturing themes early.
Excellent stuff, Connor. Thanks. And let's take it over to Todd now. He's got 3 semiconductor names that he's going to talk about. Semiconductor equipment company names are 2 of them. Go ahead, Todd. We'll start with ASML.
All right, great. So I got a couple names here with very long bases. Connor talked about some of the big bases. And overall, let's start with the SMH, Don, just to get some perspective on what the group's doing. And then we'll go to ASM. So SMH on the daily is just shy of all-time highs, being held back a little bit by NVIDIA, which is lagging the rest of the semiconductors right now. But there are a few standouts that are leading new price highs in that group, and that's what I want to bring to your attention. And Don is going to pull up ASM Holdings, which is a Dutch company, and they manufacture equipment for any company that's producing semiconductors, including Taiwan Semiconductor. And this is a giant base that's been developing now for, over a year, 65 weeks. And you've got new price highs coming out of 2024, the spring and summer of 2024 levels. So this is a new group that's moving. We're also seeing it in applied materials as well. And we're going to move on now to the second name in the group, which is Analog Devices. And that's AMAT on the chart now. That's also been making new highs. Analog Devices is another name that's got a massive base. And we look at the weekly chart, and again, Don showing the daily there. The weekly, you've got this big base, several stage 1 base on base patterns going back to 2022. And now you've got this big weekly base breakout starting last week. And it started with an earnings gap and run, which basically has carried it now for multi-days. And this is really what you want to see on these breakouts, are a multi-day move above the base, strong relative strength. And also I want to point out that you've had a big earnings turnaround in this stock, where last year, 2024, we had a negative 37% drop in earnings. And this year, we're now turning the corner, and we've got several 20% plus earnings quarters and sales growth coming, and over 30% earnings growth coming. So you've got a big turnaround here. And basically, what's going on in this group is these are the analog and industrial semiconductor companies. So they're big in serving the automotive and industrial markets. And we see companies like Ford and General Motors breaking out to new highs. And these companies provide semiconductors for a lot of these manufacturers. Now, finally, the last one I want to bring to your attention is Lattice Semiconductor, LSCC. This is another strong breakout here today that it's been a fairly choppy stock, but it's developed this 21% base, and it broke out. Relative strength is making new highs. And again, these are all semiconductors that are not necessarily related to the data center, which is where NVIDIA and a lot of the semiconductors that have led for the past couple years. These are some new names in some new areas. Lattice makes semiconductors They're big in the networking area. And again, this is another company that had negative sales growth and negative earnings growth for the past 5 or 6 quarters, and is now turning the corner to where we're seeing 20% plus sales growth and triple digits to 40% earnings growth coming down the pipeline as well. So again, these are three names breaking out to new highs over the last week or two or today, and some new names to focus on in the semiconductor group.
Great stuff, Todd. Yeah, very clearly these three, not massive in data centers, but leading the SMH and the SOX, which I like to look at quite a bit. The difference between SMH and SOX is that one of them has the two big international semiconductor equipment names in, and the other one doesn't, TSM and ASML. Good stuff. Let's take it over to Ted, and he's going to start with a stock that we've been accumulating recently, Tesla, after it finally broke through some resistance this week.
Thank you, Don. So I have a similar message as Connor, just talking about how you referred to looking for big bases to be early in themes. Don, if you could bring up the monthly chart of Tesla, this has been one we've been talking about on the podcast for a while now. You can see there's a 4-year base forming since the highs of 2021. And we've talked about it on the past too in our daily videos and on previous podcasts. The character of Tesla in its entire history is many years of basing sideways as they advance their technology, as they come out with new products and services. And then all of a sudden, you'll have a catalyst. The previous two were better than expected delivery numbers on earnings reports that led to these multi 100% moves that usually last between a year and a half to 2 years. And then Tesla goes dormant again for multiple years in a row. The last sideways action was, I can look at that, almost 8 years long, 7, 8 years long. This time around, 4-ish to 5 years long. And you can really see this monthly chart getting extremely, extremely tight now at the top of the range. You see consecutive series of higher lows built as well. And when you see higher lows built, volatility contract from the left side of the base to the right side, that is a primary sign that something might be ready to break out and that institutions are stepping up and accumulating the stock. And we're accumulating it as well as trend followers. Our goal is to ride the coattails of institutions and the big money and smart money. So we can go on the weekly chart now, Don, just to examine the stock a bit further. You can see we broke out of that stage one base, but at the time, the key moving averages on the weekly weren't really stacked on top of each other and rising. So although you did get that initial push, it found some resistance at around the 470 level. And we've had this back and fill action pull back to the 20-week, just like the indexes. And that really has given the time for just all the moving averages to align, which tells us that momentum is aligning to the upside now. Recently, we had an undercut reclaim. Let's go on the daily now to just zoom in even further on the chart. You can see that 411 line. Yeah, that's perfect too. And this actually extends all the way back to the highs of 2021. So it's definitely a key level. And we kind of had a little bit of noise there, some chop around. But ultimately, we reclaimed that key level. And when you have failed breakdowns, or we call it undercut reclaims, that can lead to quick moves up the right side, which we are starting to see now. Because it's a little bit compressed, and you can see that EMAs on the chart are still slightly below the 50, and the 50 is pretty much flat. We might see some back and fill action to complete the handle, and then perhaps we can take out 470 and make new highs. And this is more of a technical view of the stock. Onto the more fundamental side, well, there's really not that many fundamentals in terms of earnings and revenues right now. You can see Tesla growth has been decelerating. I think that's a minus 31% year-over-year growth on earnings and only 12% revenue growth. But Tesla now is not trading on the future prospects of their electric vehicle business. Um, the reason it's still having this high PE ratio is because smart money is looking towards humanoid robots and robo-taxis, as well as their energy storage side of their business, including solar as well. And the big bet is on Elon Musk and the company executing on humanoid robots and robotaxis, which would address I mean, we don't even fully know exactly how big the total addressable market is for robotics. I don't think anyone knows, but one thing we do know for sure is that it's a huge market to address, and it'll affect all industries. So the next product cycle could potentially begin in 2026 if Elon's timelines aren't too optimistic, which he tends to be a little bit. But as of now, he's said on the last shareholder meeting that production of humanoid robots begins in April 2026. Same with robotaxis sometime in the next year as well. So that is what we're looking for as the end factor for Tesla. Continue on, Don,
Excellent.
if we bring up GEV, again, another big multi-week and multi-month base. This actually ties directly into the name Connor talked about in EQT. EQT is a natural gas miner and just producer, but GEV is the biggest natural gas turbine producer for data centers. So these turbines take the natural gas and actually convert that into the electricity. You can say maybe EQT, natural gas itself, is more like the picks and shovels for turbines that use it to produce electricity for data centers. And Connor cited that 60% of electricity generation will be from natural gas, at least in the more recent future, until we can build out other forms of energy, renewable energy, nuclear, hydro, solar, and more. This is a name we own in GROTECTION Turbo. Connor and I are definitely stocking it as well. It's looking good, starting to build this right side here, reclaiming all key moving averages, reclaiming the 600 level as well, and that November 20th reversal high that Don talked about on all indexes on the NVIDIA earnings. And so that's a brief overview of the technicals and fundamentals for GEV, but still playing a massive role in the build out of AI. And then finally, outside the AI theme, we've been really um, optimistic on precious metals. We own both gold in Turbo and in GROTECTION. We've been accumulating against the 21 EMA a couple of weeks ago, and it's been a slow trender, but it's nice having something slow, potentially less correlated to other areas that we own, just to smooth out the volatility, if you will. And right now, it's building this handle here. A little bit of volatility today after PCE, but still holding the 8 EMA, so nothing is wrong with it so far. And in terms of the macro picture towards why gold and precious metals may be moving, I mean, there's so many factors. It could be a mistrust in government, or participants are looking at this rate cut causing just maybe a resurgence in inflation due to a hotter economy as well. Um, or just people think the dollar is losing its value and you want to own hard assets as well across the world. So those are just a few points there. Gold miners is just a higher beta way of playing gold. We own Nugget in both Turbo and GROTECTION as well. This is also just building another cup with handle as well. And we started buying this a couple weeks ago along with gold out of that lower consolidation, breaking above the 821.50, and now we're forming a nice handle above the 821.50. So we added onto it a little bit today, and yeah, just see how it continues to play out. I read some stats that gold seasonality is quite favorable heading into year ends, as well as a little trickle through January and February. So we have seasonality on our sides as well here. And then silver, its sister. Last time we checked the ratio of price, I believe, yeah, price between silver and gold, it was like 80 to 85 to 1, which is historically indicating that silver is undervalued relative to gold. And you can see silver's making a new all-time high, but gold hasn't yet. So it is showing some RS to gold here, and it's starting to close that ratio a little bit. But we were buying this a few weeks ago out of that lower cup with handle, um, breaking above the 8 and 21 EMA. The macro picture of this is similar to gold as well, being the precious metals theme. So that's a couple AI names, AI related names, and then precious overview of precious metals, which really has been a strong sector or strong group in this last year.
All right, great stuff, Ted. That is going to wrap it from the tech team. Let's go back to the S&P 500, see where we are right now, and still back in that opening 30-minute range of 68.66 to 84, currently trading at 68.67. So if you go to 5-minute chart right here, there's the opening 30-minute range, there's the breakout, there is the undercut, and we're back into it right now. So when you undercut intraday, look to the left to be right. That undercut coincides with this initial breakout at the open yesterday, which then sold off. We chopped around, had a afternoon sell-off, and then a strong close, followed up with the gap up today. Gap up and strong run higher. Most of that given back. Undercut, and we're back in this range right now. So we're always evaluating what's going on with the indexes and how that is carrying over to the individual names. So obviously we would have preferred to continue to keep going higher here. But, Ted sent that text to the team, and it is what it is. And here we are. Dan is not here, but the spirit of Dan is always here, and I will send it back to him to close out the show. All right. Thanks, Don. Thanks, team. If you like what you heard, tell your friends, tell your family. Go to revereasset.com. We'll be back next week on your money. Not their money. It's your money. And remember, it's not how much you make in the market. It's about how much you can